Welcome to Green Money Matters, the podcast where your financial future meets the planet's well-being, bringing you the latest on climate issues and uncovering new and exciting investment opportunities that make a positive impact.
And I'm Chris Everitt, your guide to sustainable investing, ESG funds, and all things green. Each week, we'll explore the intersection of money and sustainability, showing you how investing wisely can create a greener world and grow your money.
From renewable energy projects to eco-friendly startups, we'll dive deep into the companies and funds that are driving change and making a difference. Whether you're a seasoned investor or just starting your journey, Green Money Matters is here to empower you with knowledge, insights, and actionable tips that'll supercharge your portfolio and make a positive impact on the planet.
Join me as I speak with industry experts, successful investors, and thought leaders who are shaping the future of sustainable finance.
So get ready to invest with a conscience and join the growing movement of individuals who are reshaping the financial landscape. Welcome to Green Money Matters with your host, Chris Everitt.
Hello and welcome to Green Money Matters. Joining us today is Lesley Li from Impact. She's going to tell us an awful lot of things, mostly around the ideas and concepts around how to collate, screen, and score for sustainability and impact investment. So let's get into this. So I'm really honoured, really happy to have Lesley Li, the CEO of Impact, joining us here today. Lesley, formally welcome.
Thank you for having me. It's been a while since we talked last time. I always thought, hey, Chris, when are you going to invite me on the talk? And finally, I'm here. I'm very honored. Thank you for having me.
Oh, no, I'm so happy. Really glad you're here. So let's kick things off. It's been a long journey for you. Tell me how you got to where you are now. What journey led you to founding Impact? What motivates you? Tell us.
So my background is actually in banking. I started with JP Morgan the day Lehman Brothers went bankrupt. I started with the London office. Actually, the department I joined was the credit trading department, right in the middle of the credit crisis. So that's how I started my banking career. And I was a graduate student at the time. And I spent 3 years in JP Morgan. And then I decided to go back to study. So I went back to study in Cambridge. I did a Master of Finance. And I went back to banking. I joined Barclays, 3 years there, and then a few years in a Japanese bank, Mizuho. That's until 2019. But just over a decade of experience in financial service, what made me realize is that the industry is very short-term focused. I thought about this financial crisis and also the mis-selling scandal in the UK. And I thought, right, there is a fault in the financial market here. It's actually not actually favoring the population that they're potentially not having too much money or not having much of financial literacy. But that is the majority of the society. They are being ignored. And if we're just relying on the financial services as it is, we're never going to get there. Not to the time that my daughter grows up. So I thought, okay, I either can wait or I can do something to change that status quo. So 2019, I thought, let's take a leap of faith. It's my time to make a change. And that's how Impact was born. And this is what we're still doing now.
Oh, fantastic. So, I mean, the Lehman Brothers stories, I mean, that's an odd one. I mean, that didn't sort of put you off, finance and banking forever then. I mean, how did that form you in that sense?
So, funnily enough, I was an engineering student from Cambridge just before I accepted the offer to go into banking. In the UK, well, I have to say, as an engineering student, coming to the end of your study, you quickly realize that the pay in financial services is considerably higher than engineering. As simple as that. And I chose a career in banking just because they pay 100% more than engineering.
Yeah,
So,
I made the same choices in education. I was a teacher for a period of time, and then suddenly realized actually my economics might be better rewarded in the finance and banking industry.
and that actually is part of the reason that in my awakening moment after a decade in banking, I thought, right, I came from technology. I came from the mind with innovation, and this is time. This is the time to go back to that. So although I had a detour of 11 years and then came to a point that, you know what, it's time to use technology, to use innovation to make a difference, and combining with this 11 years of financial services experience I accumulated. So then that is actually the education that came back to shine now.
Let's get into this. What is your vision for U Impact? What do you ultimately hope to achieve?
So the mission is very simple. We're here to mobilize capital towards sustainability. Mm-hmm. If we look at the landscape right now, it's a huge funding gap. A lot of reliance is on public funding. That is not enough at all. And then that is why that we say, how can we actually gather the private funding? There's a lot of money around. How can we unite that money so that we can put this capital into something useful, into something that to give us a hope, to have a sustainability push, to really change the situation that we're in right now in a financial or in this climate crisis. So that's the vision.
And how are we going to get there?
And the first number one, we start with a bit of 101, is to give that transparency, that companionship when it comes to the people like you and me, to start thinking about, hey, what can you contribute with your money, no matter how much money you have, into sustainability? That's why we choose the name. If you look at our name is U Impact. We're talking about no matter who you are, that you can make an impact. And then if you look at our URL is uimpact.earth. Every single one of us can make an impact on our earth. Yeah. And we're really enabling that with a gamified approach, with the aim to have this transparency and translate this complex data when it comes to sustainability and ESG into something people are accessible, understandable, to get into the mindset of putting their money into sustainability.
Right. So U Impact itself, it's a platform, and it's primarily focused at retail investors. Do you support retail investors directly yourself, or is it a white label that you then place in other institutions?
So it's a white label solution. We actually generalize it as for end investors. So that could be for different use cases. For retail banks or fund platforms, that could be for retail investors. So those are individual investors like you and me. Or it could be in the private bank setting for high net worth individuals. Or it could even be pension funds as a communication tool. So if you look at our mission, we're there to mobilize capital. Whoever's capital it is available out there, we want to mobilize it.
So the idea then is to match people's individual requirements, individual sort of hopes and needs with sustainable solutions, sustainable investments, which are going to have a real impact.
That's right. That's the first step.
Okay.
We actually have a 3-step approach, right? The first step. We say, actually, people, we do know that looking at the data statistics out there, people do want to put their money into sustainability. And if you could look at the private money engagement into investing into the sustainable investment products, it is, since the beginning of the pandemic, has grown exponentially. But what we're saying is that actually now it hasn't got that transparency. And that, first of all, engagement. So number one, we thought is leveraging data to give some sense on this transparency, to give people some sense on the ESG data, what they mean, how can they leverage that? Number two, we're talking about conversion. This is the engagement part, right? The convert people's interest into on sustainability into actual investments. But after you convert them, it's not going to be enough if there is no long-term companionship. This is where retention comes in. And through our interface, we're loaded with this ESG data. That becomes a data collection tool, actually, for us to start having an understanding on this particular user base. If you look at solutions out there at the moment, it's one size fits all. That's why it's not working. But different investors, different types of people has different needs. So then we use behavioral science to start understanding different types of the behavior, and then use behavioral nudges to accomplish this long-term companionship. So then people can keep on investing sustainably for the long term, not just one-off. That's the aim.
Okay. So to tell me what you mean by, there's everything out there is one size fits all. What do you really mean by that?
So we did a study. As we were developing our solution, we talked to hundreds of individual investors. We tried to understand, hey, why are you not investing sustainably? We realized there are two main reasons, very simple reasons, actually. First of all, the confidence level is not there yet for investor. Secondly, the perception on sustainability is not mature enough yet. What does that give us? It gives us a 2x2, right? What that means is that through the two parameters, we're able to map the whole population into start with 4 types. So the bottom left quadrant, I can't show you the chart now, but you have to follow my description with your imagination. The bottom left quadrant is the average.
We can put that on the show notes afterwards. So yeah,
that's right. Cool. The average Joes. Those are the people, they probably have a savings account, haven't thought about investing, haven't thought about sustainability. That's the majority of us. Majority of people out there. So that's the people. And since the beginning of the pandemic, we see a lot of movement from the bottom left quadrant to the bottom right quadrant. That's the people who have the willingness to start putting their money into sustainability, but have no idea where to start. One interesting observation is that a lot of women are there.
Excellent.
That is very interesting. So those are two quadrants of population who hasn't done anything with their money.
All right? Sure.
That is, and if we move on to the top part of the chart, the top left quadrant, we call them the skeptics. Those are the people they potentially have already had a portfolio. They probably have even traded cryptocurrency, and they say, hey, I'm not a charity. I don't really care about sustainability. But the truth is, it's not that they don't want to. They just have no idea about, they don't have the data or the tool to get access to. And we prove that hypothesis with experiments. We gather this type of skeptics and we loaded a range of sustainable funds onto the platform we've developed. We asked them to choose. Basically, what I allowed them to do is to find the sustainable funds, has a comparable historic return, just like the conventional ones, but has a higher sustainability profile. Almost all of them opt for the more sustainable options. So you see, we're talking about different types of investors. Their needs, the way they need to be nudged, they're different. We can go on to the behavioral nudges and different types. And we actually work with a professor based in Berlin from ESMT, and he's also part of our advisory board. And we're really converting this theoretical knowledge when it comes to behavioral changes into a practical tool to embed into a tool that financial services could help to empower their end users so that they can start investing sustainably and confidently. And that's how we envision, and that's what we did. And then it's a tool out there. We're really trying to push for that.
So this is brilliant. I mean, what sort of, I mean, do you have some metrics around, how fast people are able to move from, bottom left to top right quadrant? How quickly can you move people across? What sort of, key information do you need to get them there? What's the big impetus?
So we've done experiments, but that's experiments. Now we need real users. And that's got us thinking, say, what is the best way to really reach out to as many users as we can? We figure that, okay, how about B2B, B2B2C? So then that's the channel we're going for. So we are there to partner with the financial institutions to leverage their user base. So then we can start testing out, having enough data points to test out how we can optimize that journey to convert people from any other quadrants into the top right quadrant, which is the confident and sustainable investors. So then that's to summarize that answer is that now we're really looking for partners so we can optimize that.
Okay, excellent. What is your partner profile?
So we have one client, which is almost live, is SDG Investments. Mm-hmm. They're based in Frankfurt and Berlin. And now we have a pipeline of financial institutions want to partner with us. And when it comes to partnerships, we have just partnered with Ecolytic, which is a Berlin-based scale-up. And they already work with Visa and a number of banks. And I just went live with a couple of very exciting banks. So we have curated a joint value proposition to offer that to their existing clients. And also we have just partnered with 3 global consultancy firms to roll out our solution as our implementation partners. So we haven't done press release on that yet, but once one is out there, and then you'll see. But then their global brands really facilitate us to start embedding into the actual financial services ecosystem.
Very good. You can't tell us who they are.
Not just yet, but you'll definitely read about them.
PwC? I'm teasing. Don't worry. Let us know as soon as it's out there. Let us know. We'll be very interested to share that information with our audience.
That would be great.
So, the perennial problem for I think ESG sustainable investors is belief in what they're being told and what they're seeing and what they're reading. How sustainable is it? And with so many different ratings agencies out there and scandals around greenwashing, how can we trust the ESG industry? Where does it go for investors?
It's totally understandable, right? And the questions from the end investors. Well, we did this interesting study just for our leisure. We took one company, take Tesla as a very, very good example. We took 5 different ESG ratings on Tesla. They all come in different colors and shapes. Yeah. That's confusing, even for me. I'm not saying which rating is correct, which rating is not. But deep down inside, actually, is because the difference comes from each of the rating has a different set of methodology. And then I'm not saying they're black boxes. Actually, if you dig deeper, they all have methodologies, white papers and everything published to the public. But the thing is, no one would bother to read, not as an ordinary individual investor. And this is where, and also the lack in transparency is not helping when it comes to looking at this financial instruments. Simple example, you take a sustainable fund. Funds are basically a basket of companies, whether there's bond inside or equity inside, but they really come from different companies. It's just a basket of them. Number one, it's really, really hard to see what companies the compositions of that financial instrument actually is. Simple as that. It's not that they're not disclosed. If you dig really deep, I mean, we do that all the time. You have to go to their semi-annual report to really go to page 159, and then you find that composition. But no one bothers to find that. You see, there's 2 layers of confusion with complexity and lacking transparency. Combined together, we're talking about 0.1 times 0.1, you get 0.01. And that is confusion of the confusion built on each other. And that's why you have skepticism, you will have this greenwashing, because the greenwashing parties, and then they have the chance to capitalize on lacking transparency. And that's why the lack of trust and all this scandal comes in. And if you look at the regulation part, it is trying to put in some of the standardization and transparency into this whole picture of complexity. But if you look at the disclosures itself, it's not for normal human to understand. We deal with those data all the time. So that really is very much understandable. So would you say that the world? I say it's not there yet. ESG is not there yet. But later on, I can tell you what it takes to make it more useful to potentially save the world, have a chance to save the world.
Okay, good. I want to hear that. So does your platform, does you impact help ordinary investors see through some of this fog? Did you give us this some of this insight to sort of rule out some of these other noise?
That's right. So the data will come in 2 layers. Well, we don't actually come with our own data. We're saying that there are enough data out there, whether that's regulatory data or existing ESG data. Why don't we make use of that? Right? A lot of this debates on, hey, how perfect is the ESG data right now? Well, it can never be perfect. The point is to make use of it. So this is how we make use of it. Layer number 1, regulatory data. So we do very much appreciate the attempt from the regulators to standardize this very complex ecosystem. So then we say, why don't we translate all this very hard to understand, complicated regulatory data to a way that is understandable and accessible to the general society? So that is the number 1 layer. And they call it the article about, you have this SFDR or EU taxonomy, and then they start calling financial instruments like Article 6, 8, and 9. And we say, okay, they're merely just colors for us. It's either brown, dark green, or light green or dark green. Why don't we simplify that, dumbify it for the general public to understand? And second layer, so what you see that the fund layer is not enough. The second layer is the company level. This is where we say, okay, we need to enable the end users to drill in to the lowest level, the most granular level, to understand what makes up of that fund. To answer your question, so yes, you'll be able to see what makes up of that fund, and also what are the sustainability profile of that fund, and also the methodology to support that sustainable analysis of that company in a way that, like a layman's language, people can understand.
Okay, brilliant. I mean, aside from the big regulators, are there any sort of are there any moves by some of the ESG analytics companies to try and unify their view on things? I mean, are Sustainalytics going to be talking to Bloomberg and trying to standardize? Is the market going to sort itself out, or does it all rely on regulators and on platforms like yours?
So this is how I see it. Regulators very much top down. And then the different data providers, and then it's quite a bottom-up approach. I think both are very much needed. On the grand scheme, we have the top-down approach, set the tone by the regulators, but then instead of having to withstand a long period of time for it to perfect itself, and it's complemented, I see it, by the other ESG data providers, and especially we see a lot of upcoming ones. Well, you mentioned about the Sustainalytics, and then we have Clarity AI, we have ESG Book, and all of those different players in the market, and they're all really going towards the right direction together. So I think it's not about one is wrong or right. It's about they really start bridging the gaps, or start meeting in the middle and have that top down and bottom up approach to achieve that ultimate goal. And then having said that, we're starting to partner with up and coming ESG data providers.
Excellent. Okay. I want to talk to you about banks. Now, you spent over a decade with the likes of Barclays and JP Morgan. Now, banks' roles in ESG and climate seem to be one of, look, don't blame us. We're just here to provide you with what the market or clients want, whether it's green bonds or funds or financing fossil fuel companies. Do they still get a free pass on this, or do they actually need to start actively committing to all futures now? What are your thoughts?
So 3 years ago, when we started the company, at the time, the time wasn't right yet, because the voice from the general public, from the government, was not that strong enough yet. But 3 years on, what we see now is it's about whether they want to. It's actually about it's time they have to. All of those pushes from regulators, and even stronger is from the general public. They really demand as a right and to have that right and data and then transparency for them to start having some control of their money. So what we see, we actually talk to banks day in and day out. We're starting to feel that urgency, and they say, we've got to do something. They are regulators, they're our users, really at our back, slapping us to do something. We're starting to see that they're asking for solutions, and they're starting to take actions, which is a very, very good sign, if you ask me. But of course, there are all sorts of obstacles along the way, and that is something I'm working on day in and day out, and with our partners, with the banks, to see how we can break down all these barriers of entry to start pushing that towards the mainstream.
I mean, it's part of the problem that you mentioned earlier that their results are focused on the short term only.
Yes, the reason why I left banking industry was the fact that I wasn't happy with this short-termism focus. But now, since the pandemic, actually, the long-term focus is starting to come in play. And then also people start to see there is not trade-off when it comes to tackling sustainability and running a business. There is not trading off the sustainability with profit. Concrete evidence how sustainability, ESG, can actually create value. I can give you a couple of examples. I mean, in the financial services, fossil fuel, why are BlackRocks and they're so focusing on promoting sustainability is because the share price of a company comes from the valuation of the company from these revenue streams, right? And then, for example, the fossil fuel companies, a lot of the revenue come from a part of the asset is called stranded asset, which is not allowed to be converted into revenue now, which means their valuation will go down. With this regulations coming in, say, hey, you're not allowed to capitalize on this part of the asset because of the regulation X, Y, and Z. And of course, that will affect the share price. And then it becomes a money question, right? And then when you understand the underlying rationale behind, why would sustainability would help with profit, and then that example I thought is pretty obvious. Yeah. And there are a lot of other examples like that. Yeah, no, excellent.
I mean, it's not realistic, is it, or is it? To ask the likes of HSBC to pull out or withdraw their investments or debt support for fossil fuels and existing platforms, or is it?
So if you look at the financial market, when you talk about withdrawal, that's divestment, right? It just get rid of it. To me, that might not be the best option. If you look at the fossil fuel industry, it's a huge industry. I know when it comes to sustainability, if you would take a step back, the textbook definition of sustainability is not just environmental. It's also economic and social. So you see, you pull out the investment just like that from a fossil fuel company, you're actually diminishing the other two aspects on sustainability. So there has got to be a balanced approach. What I see a more plausible approach is actually helping with that transition of that industry. When it comes to transition, honestly, I actually don't think the fossil fuel company, they're completely on their own. Really takes the whole society to complete that transition. So from my point of view, when it comes to the fossil fuel company, it's very important to start pushing them to start accelerate that transitional process and monitor them and be transparent on how well they're doing. The ones, if they are actively trying to really transition towards a net zero economy, they should be helped and supported by the society. However, instead, if they're not doing a good job, they're just paying lip services and just PR work, and they deserve to be divested 100%. So I think when it comes to talking about this controversial topic areas, divestment is not the right answer. It's just a lot more to that.
Yeah. So it's it's a transitions argument.
That's right.
Yeah. Okay, let's get on to the more exciting topic of investment ideas. Where's the money going? What opportunities are out there? What effect can we have? Where can we as investors put our money to make a real difference?
I'm not gonna predict the market. What our approach is that when it comes to sustainability, this is where the long-term money should go into. You can't go wrong with that. We know the bigger trend, the climate crisis, the climate change, it is happening. So when it comes to the decarbonizing the economy, that is a trend that we can't avoid. But of course, like I said just now, when it comes to sustainability, just to support our society, it comes in different forms. Environmental is just 1/3 of that story. Think about sustainable economical growth. And what about social? That's a huge part. And I would encourage the investors to break that down using frameworks like the UN's Sustainable Development Goals, the 17 areas, to break that down, to start looking at investment from different angles, rather than having as a simple answer, oh, the energy looks like a good bet and let's put our money on that. And then that's why we're starting to encourage the diversity in thinking for the investors when they look at their money. But come back to the question, hey, what are the data available? What about the tools available? That's why we're saying, okay, I'm not here to give you the fish. I'm here to teach you to fish. And that's why Impact, we have this tool to really enable people to do the fishing properly. And then not just today and tomorrow, but it's like for the rest of your life and the next generations to come as well.
Okay. No, I really like that analogy. Yeah, you're not just here to give people the fish, but you're here to teach them how to fish. That's nice. I like that.
And if you want to know the Chinese idiom for saying that is 授之鱼而非授之渔. Sorry, I just want to throw in some Chinese Chinese idioms in that. That's why my other interest.
Brilliant. I'm not going to attempt that. Yeah, but no, that's fantastic. So, but what are interesting tools to invest in sustainability? Things like blue bonds, green bonds, ESG ETFs. What are you seeing out there? Are there different financial instruments to invest in sustainable goals?
of course, we have to come back to the suitability question. So it's about who are we talking about? And if I would imagine here, we're talking about, say, retail investors, people like in the general public. My advice will be, I mean, if you have no idea about how the financial market works, don't bet on single stocks. I think betting on single stocks, that's what professional traders do. But a lot of them from this empirical studies and stock trading just speculate that's the best way to ruin your bank account. So then for the people who are not professional traders, my advice is always go for funds. Either that's ETFs or that's the normal funds. But of course, ETFs, okay, that's another topic. ETFs are perhaps easier to see the full transparency of what is in there. But in general, I will always say go with the funds because they're already diversified. And it's about understanding that what is the theme of the fund. And then when you can be sure that, okay, there are ESG profiles that is from trustworthy, easy to understandable from your point of view, and start from small. And don't bet or don't bet all your eggs in one basket, and spread it out as well. Start, say, 50 euros per month. So then you have some skin in the game. You will start observing the market and then put into a diversified portfolio as well.
Very sound advice.
Yeah.
Very sound advice.
But of course, another thing to put that, it's about, well, I will always say there are 50 shades of green when it comes to investment products in the sustainable space. You got to understand, okay, distinguish between the brown, the light green, all the way to dark green. Well, light green is the do no harm, just the exclusion factor. But if you go all the way to the dark green, they are like the impact investing area. They could be, the project-based investment, which has a lot higher risk level, which might not be suitable for the day-to-day investors. But then we're going to the portfolio thinking. But then as an individual, then you can put like a bigger part of the money into lower risk or more diversified, and then have a small portion, say, put into the dark green in something you really believe in. So it's really about understanding your risk appetite and having understanding on the shades of green on the financial products, and then start experimenting, start doing something, not just reading about it. Start small.
Yeah, excellent. 100% support that. How do investors actually have an impact, though? I mean, one of the counter arguments, and to some extent, this makes absolute sense, that if you're just reinvesting or moving money around from one share to another, there's no new money going in there. It's just swapping in and swapping out. How do investors make sure that their money actually has an impact?
You see, again, first of all, it's transparency, right? Well, we talked about funds. You got to start understanding what is in there. From when it comes to putting your money into a particular financial instruments, I'm not saying, well, unless you're in the dark green area, you have this quite direct impact onto the sustainability. The effect could be quite indirect. One of the indirect effect will be disciplinary factors you have on the companies. When there is transparency, people actually knows what their money is ending up with, either geographical or on a sector level, and they start to have a disciplinary effect on the companies they're supporting or not supporting. We're not there yet. It's absolutely not there yet. That's why that indirect effect is not going to be transparent yet. But once we have a tool for people start having that conscious awareness and action. And this is where they can say, okay, in this fund, I want my money to support X, Y, and Z company. I want to exclude X, Y, and Z company. This is my conscious choice. And that is a feedback loop to the companies saying, okay, if you actually play the good corporate citizen, the society citizen, you get support from the day-to-day investors. Otherwise, people is going to exclude you. So this is the idealistic world we're trying to push towards, to really put the power into the hands of day-to-day investors. And this is also the data analytics will be able to feed back to the fund managers, to the portfolio, like the companies included in the fund managers' funds, to really have that power reflecting what people are not looking for and what people are looking for.
Excellent. What do you say, or what are your views on corporate engagement? And does your platform give investors that opportunity?
Not yet is the short answer. But like you're saying, we think, okay, first of all, it's transparency. Once you have transparency, then we talk about engagement. But of course, there are some of the very exciting providers out there. They're pushing for engagement, and also some of the asset managers, they're really acting on the forefront of that. But the asset manager, they're talking, those are the institutional investors. But then how can we empower the individual investors to start having that power to engage and push for the corporates to do the right thing? But I think, the first step is to having that transparency.
Yeah, totally. Now, I'm not asking you for fish, but what new technological advances have you seen out there which just excites you, just individually, not necessarily suggesting that that's a great thing to invest in, but what excites you in terms of what the future holds for us?
Well, generative AI is a huge topic right now. Everyone's talking about it. It's almost like a buzzword. However, when my 8-year-old was using ChatGPT for her homework, and I thought, oh my God, that's like, if you talk about the technology adoption curve, when an 8-year-old is using ChatGPT for homework, and I thought, wow, this is revolutionary. And that is really exciting me. And this actually prompts some of the thoughts into our product roadmap. If you look at our platform, we always call it, it's like Google search for sustainable products. But now, you know what? We're starting to develop some of the features that it's like ChatGPT for sustainable products combined with a graphical representation. How exciting is that? It's about that the people who are looking for different products when it comes to sustainability to put that money in, and we can do exactly that. So that is something I thought is enormous.
Yeah,
and then I'm not joking when I'm saying this is one of the features where we're developing.
Fantastic. Yeah, I mean it's thrilling and potentially sort of very scary all at the same time. But terrific. What's your vision? What's next for you? What's next for You Impact? What's coming up? What are you going to see? What are we going to see?
So for me, personally, yes, I do run the startup, but the reason why I set up this startup is actually to achieve this, what is passionate for me. First of all, female empowerment. I have a daughter myself, and I really want her to live in an environment that women are empowered. We're starting to get there because she's starting to ask me, hey, mommy, why are there no men in fintech? Because she sees me and my female founder friends, and she starts to think, okay, women are there to be CEOs, are there to be engineers, and then are there to be founders and pushing them to change the world. And then this is one, financial equality besides gender equality. And that's all of that is something I actually embed into my company. I want to use it as a tool to really amplify those positive thoughts that I really want to embed into the people around me, into the society. And when it comes to You Impact, yes, we started with this small tool to engage, but in the future, it's all about putting that ultimate power to the individual people. If you think about the current ecosystem, is very, very self-centered on financial institutions. For either it's banks or financial, like fund managers or pension fund, it's always, oh, me. How can I get the maximum level of profit? That's not right. If you think about what our tool is doing, is to reverse that role. It's about putting the needs and wants of the end investors. No matter how small you are, no matter how little money you have, there is a voice, and that aggregated voice can really put that reverse into the current order in the financial system. That is what I'm ultimately there to achieve.
That's just fantastic, Lesley. That's a brilliant summary. It's amazingly inspirational. That's fantastic. I think that's a really good point to round up on. Thank you so much.
Thank you. And thank you for giving me this opportunity to really amplify the thoughts and the vision and the mission that we're trying to achieve here.
Yeah, Lesley Li, A Leap of Faith. Excellent. Thank you, Lesley. That really was terrific. That was some, amazing insights all around. And you're so eloquent. That's brilliant.
That's there was a little story I wanted to tell. I forgot, which is my first ever financial services experience is actually when I was 17. I remember it was a big insurance company. I think I told you before, a Legal and General, as a cleaning girl.
Okay, go on. Tell
as a cleaning girl. So that was, I said that in my TEDx talk when I did in Germany last year. But you talk about leap of faith. I actually did the TEDx talk. The title is the power leap of faith.
I know, I saw it. It's brilliant.
Yeah, I thought that's something. And also I want to encourage people, I came from somewhere that I didn't even speak much English. I was cleaning the office in a insurance company, right? And then before I realized I did over 10 years in the Canary Wharf, that banking area already, and then I'm already beyond that. And I thought, oh, okay, it's a lot of people may be in my shoes at the moment, but from back then, but you just got to keep pushing, and then you could get to anywhere, really.
Totally.
Yeah. So that's another thing that I wanted to add.
That's inspiring beyond
Thank
words.
you very much. Thank you.
Brilliant. Thanks, Lesley.
Thank you. Bye-bye.
And that wraps up another episode of Green Money Matters. We hope you're feeling inspired to take your investments to new green heights. Remember, it's not just about the bottom line anymore. By aligning your investments with sustainable values, you have the power to shape a better future for generations to come.
If you enjoyed today's episode, be sure to subscribe to Green Money Matters on your favourite podcast platform and never miss an opportunity to grow your wealth sustainably. Together, let's make money matter for the planet.
And don't forget to leave us a review. We really would love to hear your thoughts or ideas for future episodes. Drop me a line by email at chris@greenmoneymatters.com.
Stay tuned for our next exciting episode, where we'll explore groundbreaking investment opportunities and unveil the secrets of successful, sustainable investors.
Until then, remember, green money matters because investing in our planet's future is the smartest investment choice you could make. Thank you for joining us. Until next time, goodbye.